Hello traders, Joseph here again. Welcome to another edition of my weekly video. If this is the first time that you're watching this video, I want to welcome you and thank you so much for tuning in. For those of you that are already familiar with my videos, those of you that have been with me for a long time, I also want to thank you guys for your continued support. I really do appreciate it, even though I haven't been putting out a lot of videos for you guys recently, which is mainly due to the fact that as we all know, we're now approaching the end of the year. So with Christmas and New Year coming up, it's not really the best time to trade it because there isn't a lot of volatility in the market. I mean, a lot of traders are taking a holiday break, so it's not really, I wouldn't. I mean, that's my opinion anyway. So I tend to start trading around about the second week of December, and I get back on it until get back on it after New Year. So and I think I'll be doing the same thing again this time around. So I do have a couple weeks of trading before I stop, before Christmas comes along. So anyway, that's why there hasn't been that much trading opportunities for me to show you guys. That's why I haven't been putting out a lot of videos. I mean, I'm still working on a few trading videos, which I plan to start putting them out for you. But until we get to that point, yeah. So we'll just see what happens. So anyway, I've got a few opportunities I want to show you guys today, and I think both of them I've actually got a trade on this one. It's the US dollar CAD. So let's head over to the chart. So I'm currently long on this pair on a bad pattern, and I'll show you guys the bad pattern right here next to a leg, and we got a 50% retracement. I mean, this is kind of like a bat and a godly pattern, but I identify the bat pattern first, and the bat pattern gives me a better risk to reward ratio. So that's the one I'm currently in. I mean, it could be a godly pattern as well, because we got a 50% retracement there. So if it was a godly pattern, you would be looking for your entry to be around about, I mean, there's not a lot of difference really, just about 10-15 pips from the bat pattern. So that's if you're looking for a godly pattern, that would be your entry point. So that's the trade I'm currently involved in. This is actually a funny situation because this trade got triggered on Thursday evening, and obviously, as you know guys, on Friday was non-farm payrolls. So I kind of like, when it got to Friday about 12 o'clock, I mean, my position was almost at break even. So I kind of like closed my position and waited for the non-farm payroll, waited like half an hour after the non-farm payroll to see what the situation in the market is, because I just don't want to be taking a pointless, because that's just a risk I don't take. I mean, anything could have happened. As you guys know, non-farm payrolls, anything can happen on a non-farm payroll day. The market can skyrocket by 100 pip, or it can fall down by 100 pip. So I don't want to be in that situation, so I kind of closed out my position. And luckily for me, half an hour after, the market was still right at my round about my entry point. So I got back involved again with myself. This is the trade. I mean, if you, like I said, because the market is still a valid trade to take, and I've got my profit levels. Let me see if I can just, I think I remembered the first profit. It's going to be around 34.10, which is a good over 100 pip on the first target, and the second target is going to be around 34.79, around about there. It's not exactly the same. Obviously I have to use my Fibonacci ratios to see where exactly that is. So as you can see, this is exactly that. So I do still remember. So I might have got my stop loss at around 34.20s. That's why I've got my stop loss around about there. So we're just gonna have to wait and see how this. It's probably gonna be a slow way all the way to our target or our stop loss. Like I said, because the volatility is going to be decreasing from now on, and the reason why this is a good trade is because we do have a little bit of structure right behind here. So the expectation is the market is going to bounce back up from this level, hopefully giving us our profit target, or even taking us off our stop loss. So regardless of what happens, really I don't care, because this is just a single trade, and You know, it's always pays to look at the big picture, guys. It's always, you know, that's what trading is about. It's about looking at the big picture. Nothing depends on one trade. Nothing can ever depend on a single trade. If you got your money management right, nothing should ever depend on. Of course, you know, taking a loss sucks. It's not nice to take a loss, but that's part of trading. So anyway, that's the one I'm looking. That's the one I've got my eye on. I think we do have a potentially bullish cipher as well, but I'm not gonna be worried about that until if my bat pattern ends up, you know, giving me a loss, then I would switch my attention to the cipher pattern. So just to kind of show you guys the cipher pattern, like I say, we're a long way away from completing the cipher pattern. And we got the cipher pattern right here: X to A leg, A to B, B to C, and we're gonna have our entry point. Oh, somewhere, I don't know, somewhere. Let me just draw my Fibonacci. Oops, look at that, exactly on point. So we're gonna have a bullish cipher right there. And the fact that this market on a higher time frame is kind of in a rising channel, or on a ascending channel, excuse me, or a rising wedge. So it is a potentially, there are two potentially good trades. So hopefully one of them is going to be, I mean, hopefully the bat pattern, I'm hoping the bat pattern is going to be a winner, but like I said, if it's not a winner, then I've got my eyes on the cipher pattern as well. So if that meets my rules, then that's something I will be interested in. So moving along, the next one that I'm currently in is the euro dollar. I think I do have a bearish Gartley on the euro dollar. This is the same situation with the US dollar CAD as well. My order was triggered a day before the non-farm payroll, but I had to exit my position and wait for the non-farm payroll. And with this one, because it's not really a big trade, where was the Gartley pattern? I think this was it. Yeah, X to A leg, A to B leg, B to C, and we do have a little, because the market does have it's kind of a little bit of consolidation here. We have a resistance here, here. So it kind of was a good trade, but we'll see if the market can roll over. In another case, it can, you know, continue to rally. You know, that's really none of my business. I can't tell the market what to do. The market will do whatever it wants to do. My job is not to tell the market what to do. So as you can see, I think my stop loss is still safe. We're sitting at break even. So just like the US dollar CAD, I think I've got my stop loss at 1704, right up there. So just like the dollar CAD, this is still sitting pretty much at break even. So this is a trade that you guys can get involved if you want to, assuming the market opens at about the same position tonight. So this could be something you would want to take advantage of if you want to. So I've got my stop loss and my profit at those targets. So we'll see how that one pans out. So the next one I want to show you, which is the final one, is the Aussie dollar. They have two potential bullish patterns setting up. I've been watching this for quite a while, but none of them have been. So the first one is a cipher pattern. So again, depending on which one has the better risk to reward ratio, that's the one I'm going to take. So the first one is a cipher pattern. We go bullish cipher pattern here. I actually thought this pattern was going to complete last week, but the market came close, but then it rallied from that point on. So this is a cipher pattern. So as you can see, the market did come close, about 20 pips from completing the cipher pattern, which before rallying. I already had my orders in place, but that didn't happen. And in that case, the market has, is on the verge of forming another pattern as well. So if we're taking this as our X leg, and this is our X to A leg, taking this larger move, we can see that the market came into the 618 retracement, and that's going to give us a potential Gartley pattern that will complete a little bit lower than the cipher pattern. So we can see that the Gartley has a better risk to reward ratio than the cipher pattern. hold on, it's just gonna complete 14 pips below the cipher pattern. So there you go. I mean, a few good trading opportunities. I mean, I don't know if you guys want to take advantage of, but like I said, they're all pretty decent, but nothing is guaranteed. Nothing is guaranteed. I mean, you could, this market can, like I said, the market is going to do whatever it wants to do, but as long as you are consistent with the way you take your trades, with the rules you follow, with the way you do your analysis and everything, eventually you are going to see results. And this is one of the things that people don't get in trading. I mean, results is not about, sometimes it's not instant. Success is never instant. I think that's how anything in life is never instant. But guys, you have to be really, it takes a lot of consistency. The beginning is that's the hard part. The beginning is the hard part. But if you're consistent enough, if you don't lose your head, if you just keep being consistent, eventually you are gonna see results. I mean, it's the fact that if I point out like, okay, let me just go over to my signal service results and show you guys what the month of November has been like. I mean, it's pretty much a break-even month, really. As you can see, the first 3 weeks of the November, we only had just 3 trades, and all those trades turned out to be losing trades. And I actually had one of my signal service members who messaged me, and I was actually telling him, oh yeah, this month hasn't been good, because even at that point, I think at that point in the so let me bring in my FX book account, because my FX book account. So because actually at that point I think after 3 weeks in November that I hit my on my FX book account, on my own trading account, I hit a drawdown. I think after 3 weeks I was facing a 17% drawdown, because I've been taking losses after losses after losses after losses. And so let me just just bear with me 1 second, and I'll show you guys. I mean, obviously you guys already know this by now. Those of you that are tracking my results or are checking out my results in my FX book, you can see that. So as you can see, if I bring up the chart, it's just loading up. As you can see, my drawdown was 17%. So I had a series of losses, hitting a drawdown after the 3rd week of November, which kind of because my results on my trading account is always going to mirror the result of my signal service, even though I do trade a lot more currency pairs than I do with my signal service, but a lot of the time the results is going to mirror this one. So after the first 3 weeks, like I said, I was down in the dumps. I was even telling I was like, this month has been really a difficult month, but we'll see if we can. But that's the thing about trading. You don't know when anything can change. As long as you're consistent, you don't know when the next trade is going to be a winner. I mean, all you can do, like I said, is just try to be consistent. Come into the market, come and do your pre-analysis, follow your rules, and just take the trade, because you don't know what's going to happen. You don't know anything. Things change rapidly. You can start very good. You can start a week very good, and then end the week on a low. That's how quickly things change in the markets. And after 3 weeks, I was really down on my facing a potentially faced a 17% drawdown. I mean, it's not the first. This is probably the second time that I'm facing a drawdown. If you guys remember the month of April, which was really a horrible month. But then look at what happened in the last week of November. We had like 5 winners in a row. So a month that was suddenly looking to be like a bad month, we ended the month, which turned out to be a break-even month. Like I said, any month you don't lose money, or any month that you can have it's not a lot, but any month you don't lose. But it's because you're building consistency. That's what you're doing. So as you can see on that month, those winners you know, put me all the way up back on. If you look at my monthly returns, you know, from 17% to ending the month on just -1%. I think that was pretty good. But this is what people don't get about trading. Like I said, the beginning is the hard part, and people are gonna look at your people that, you know, I'm talking about people that actually trade, professional traders. You know, you're gonna start trading. I mean, like I said, not every month is gonna be the same in trading. Like I say, if you're gonna trade professionally in a year, out of 12 months, you're potentially gonna have maybe three good months. The rest of the months are gonna be like that. It's a lot of grinding. The rest of the months, it's just gonna be, you know, mostly break-evens, as you can see with my signal service. I mean, the first 6 months, we were only up on 2% the first 6 months. But then the second half of the year, we had really good run. So yeah, you know, this is the part where a lot of traders can't handle. I mean, even look at Microsoft, say, oh yeah, after 3 months of trading, I'm only on 4%. Yeah, 4%. But guys, wait for the good months, because you have to be consistent before that. You have to keep doing what you're doing. Stay consistent, and then when the good month comes, you're just gonna see a huge change to your equity curve. Everything is gonna change. So right now, I've gone nowhere. After 3 months, I'm still right where I started. But like I said, this is what consistency is about, guys. And people can't handle that. But the thing is that you have to always look at the big picture. So we ended the month on break even. We'll see how the month of December is gonna go. Obviously, looking at my equity curve. Go to download chart. Okay, what's going on here? It can't come up, so I can't show you guys. But like I said, you know, just making an effort. I mean, we're approaching the end of the year. I don't know how your year went in terms of trading, but obviously, as you start to plan for next year, you know, it's not an easy thing to do, because looking at the statistics, guys, you know, only less than 10% of traders are successful. So it's not an easy thing to do, guys. It's a very hard thing to do, but you have to be able to be mentally tough. You have to be able to understand a lot of things. But consistency is always gonna pay off. You have to be consistent, and you have to stay patient, because you're not gonna come and, you know, like I said, most of the time it's gonna be like that. You can be on a high one week, feeling like you're the best trader. Everything you touch turns into gold, and then the next week you're right back down to earth. Or you can be having a terrible time. You can be facing a drawdown, facing a losing streak, and then the next week you're back up. But what happens, you know, it's only consistency that is gonna make you that way. You know, but again, it's easier said than done, really. So we'll see how things go. So like I said, I mean, that's it from me. I mean, I've shown you guys a few trading opportunities that you want to get involved. So win or loss, like I say, it doesn't matter, as long as you do the right things, following the rule. That's the main thing. Like, I don't even worry about trades. Like, if you're gonna go to bed and, you know, thinking about the single trade that you placed last night, then that's something, you know, you shouldn't be in that trade, really. So yeah, that's it, guys. Thank you guys for watching, and hopefully you guys have a good trading week, and I'll see you again next time.